Okay. Hello everyone. My name is Iman from CIMB. So today I'm going to share with you how to choose a structured warrant. So before I go and kickstart this session, just let me show you the disclaimer first. So I will give you about 10 seconds here. Okay, so today I'm going to share with you about structured warrant. So first of all, I want to thank Bursa Malaysia team for giving me this opportunity to share with all of you here the skill and the knowledge on how to select or how to choose a structured warrant. But before I go further and guide you how to choose a structured warrant, we need to learn those basics first, okay? And I believe most of you heard a lot of myth, okay, or story about structured warrant from your friend or relative, your uncle, aunties, right? So, and maybe you have paid some so-called tuition fee, okay, to learn how to invest in stock market and of course in trading stock. But to me, right, whether you can make profit or not with your investment in stock market, it depends very much on when you buy and sell the stock. Same goes to trading in structured warrant, all right? So the things that you need to learn is you need to understand the fundamental of the underlying security. And also you need to learn how to do technical analysis in terms of trading stock. Then if you have both of this knowledge, right, it will help you to make a better investment decision when it comes to trading in structured warrant. So let me show you, okay, the basics of structured warrant first. Okay, what is structured warrant about? Okay, why actually CIMB Bank like us issue structured warrant? Okay, this is because structured warrant is a leveraged financial security, okay, which provide exposure to the underlying security for a fraction of the underlying security price. So for example, let's say you do not have enough capital to buy a stock like Maybank or Top Glove, okay? But what you can do is you can choose to buy the call warrant, okay, which will mirror the share price, okay, the trading movement of the underlying security. So what kind of underlying security that we can issue warrant? Okay, first we can issue warrant on single stock, okay, the mother share, and also we can issue warrant on ETF, although it's not that popular in the market and we are not issuing any warrant on ETF right now. We can also issue warrant on index. So the most popular index warrant you can see in the market right now is KLCI and also Hang Seng warrant, okay, or a basket of shares. Instead of we track one underlying share, okay, this warrant can track multiple shares, okay, mostly is in the same sector. So what types of structured warrant do we have? The most famous structured warrant now in the Malaysian market, of course, is the call warrant. So call warrant price will actually increase when the value of the underlying security price increase. So when the mother share price start moving up, then the call warrant price will move up as well. Okay, just simple as that. And the another one is put warrant. Put warrant, okay, will increase, the price will increase when the value of the underlying security decreases, okay? When the stock price goes down, then the value of the put warrant will go up. So let's say you are expecting now, because recently the market is a bit bearish, so you are preparing yourself for the next bullish trend. And when you think the next bull market is coming, so what you can do is you can look for call warrant. Okay, so these are the two types of structured warrant that you can consider when the market up and down. So in terms of exercise style for structured warrant, we have two types of exercise style. The first one is American style, and the second one is European style. So what are the difference between American style and European style? The first one is, let's look at European style. For a European style warrant, okay, we can only exercise this warrant when it is on the expiry date. Whereas for American style warrant, we can exercise this warrant anytime, okay, within the tenure of the warrant. So these are the different between American style and European style warrant. So in the market right now, all CIMB issue structured warrant. Okay, we are actually issue on European style. Okay, structured warrant. So what is actually the moneyness? When you look at or you compare structured warrant that time, right, you will see a lot of moneyness, the percentage of the warrant. But moneyness actually does not mean the profit that you will get or the profit that you will get for when you are holding the warrant until the maturity date. Okay, the moneyness is actually describe the intrinsic value of a structured warrant. Okay, for call warrant, when we talk about in the money warrant, it means that this warrant is actually the underlying share price now is higher than the exercise price of the warrant, of the call warrant. Okay, so if it is a at the money warrant, okay, then the underlying share price is currently equal to the exercise price. If it is a out of the money warrant, it means that the current share price is lower than the exercise price. So for example, let's say this call warrant have a exercise price of 1 ringgit and the current share price is 1 ringgit and 10 cents, then this warrant is deemed in the money. So that is what moneyness about. And put warrant, okay, in the money is in the opposite way. Okay, when the share price is lower than the put warrant exercise price, then this put warrant is deemed in the money. At the money is the same with the call warrant. And when the put warrant is out of the money is when the underlying share price go higher than the exercise price. So a structured warrant, right, will only have the intrinsic value when it is in the money. Like for example, just now I gave, right, the example I gave is the share price is 1 ringgit and 10 cents and the exercise price is 1 ringgit. So how we calculate intrinsic value of a warrant is we use the underlying share price minus the exercise price and divide the exercise ratio. So let's say the exercise ratio is 1:1. So in this example, the intrinsic value of a warrant is 10 cents. You won't be able to see any intrinsic value if let's say the money is the warrant is at the money or out of the money. Because if let's say the warrant is at the money, 1 ringgit minus 1 ringgit, the intrinsic value is equal to 0. So this is what you need to know at the moment. Now, let us look at what influences the prices of structured warrant. Okay, a lot of investors, they thought that the price of structured warrant is actually being affected only by the underlying share price, but that's not true. Because other than the underlying share price, right, the structured warrant also being influenced by volatility, dividends, interest rate, and tenor of the warrant. So when the underlying share price goes up, you can see that the call warrant price will go up and put warrant price go down. Okay, this is very direct impact to the warrant price. When it comes to volatility, right? Okay, when the volatility start going up, both this call warrant and put warrant price will go up as well. Now, when we talk about volatility, right, it is representing in percentage. Okay, so when a stock become more and more volatile, then the volatility will be higher. So when you are comparing Tenaga, where the share price is a bit flat or a bit stagnant, and you're comparing another stock with which is more volatile, like the glove sector, maybe like Top Glove, then the volatility of Top Glove will be higher. But when we are selling warrant at time, right, if let's say we price in when the underlying is much more volatile, then the call warrant and the put warrant price will be higher, because when the share price is much more volatile, it also means that the share price will go either extremely up or down. Okay, so the warrant price will be higher. In terms of dividends, when we price in the dividends into the warrant price, right, the more dividend this underlying company been paying in historical dividend, okay, then the call warrant price will be lower. Okay. And when we price in more dividend into the warrant price, right, for put warrant, it will increase. This is because when it comes to, let's say, ordinary dividend, right, when it comes to the X date for this dividend for the underlying shares, the share price will go down. Okay, when it comes to the X date, it will adjust it lower. That's why the call warrant price will go down. Now, when we talk about interest rate, here is the risk-free interest rate. So when interest rate goes up, the call warrant price will go up and put warrant price will go down. In terms of tenor, okay, the tenor can only be declining, okay, it cannot increase. So the tenor, when decline, okay, the time value of the structured warrant, either call or put also, will go down together. So these are the 5 main factors that will influence the prices of structured warrant. But I also understand that sometimes some of the investors, they will ask like, Iman, I'm comparing warrant A and warrant B, but how come the warrant B price move faster than warrant A? Okay, but before I answer you this question, right? So you need to look at this question here. Which of the following warrants are more sensitive to the changes in the underlying security price? Okay, so you are comparing in the money warrant, at the money warrants, and out of the money warrant. So the answer is the first one. Deep in the money warrants, right, will actually be more sensitive to the changes in the underlying security price. Okay, so a shorter tenor deep in the money warrant, okay, are more sensitive to the changes of the underlying price in terms of absolute terms. When we say absolute term, it means in terms of the value. Okay, so when the share price move up 1 cent, a deep in the money warrant, okay, it will also move up like 1 cent, okay, in terms of value. So you will see more clearly in this diagram here. Okay, so this is the payoff diagram of a call warrant. So the put warrant will be in the opposite way. Okay, so you can see the warrant moneyness here and also the sensitivity. When the share price start moving up, right, the warrant price, okay, the curve here will move more steep and steeper. Okay, but when it is set out of the money, even when the share price move like 5%, the warrant price may not move much. All right. So for example, let's say the exercise price of this warrant is set 1 ringgit. Okay, and then the current share price is 2 ringgit. And another warrant you are comparing is the exercise price is also, I mean, same exercise price, but when the underlying share price is lower than the exercise price, right, the warrant price will move slower, okay, when you compare to a very deep in the money warrant. Okay, so this is why when you choose a warrant, that time you need to be aware whether it is a far out of the money warrant or not. Okay, so if you are buying a far out of the money warrant, then of course the warrant price will move slower compared to a deep in the money warrant. Okay, so before you invest in structured warrants, right, you need to know also what are the key risks. Okay, so the first one that you need to remember is warrant will have a limited lifespan. Okay, so all structured warrants have a finite lifespan and it will expire on a specific date. So you must always check, okay, when is the expiry date of the structured warrant before you're buying it. So the second risk is the credit risk. When you buy warrant that time, right, when you hold until maturity date, you also need to make sure that the issuer will be able to pay you back the cash settlement amount if, let's say, the warrant is in the money. All right, so you need to check what is the credit risk or the credit rating of a issuer. And the third risk that you are having is the market risk. The price of a structured warrant, right, like I explained just now, is actually affected by many factors. Okay, not just the changes in the underlying share price. And also, if the warrant, the underlying security of a warrant is a foreign stock, then it will also be influenced by the FX rate changes. Okay, other than that, just now we mentioned is the volatility and the interest rate. Okay, although interest rate, we won't see so much changes, but when we are in the increasing interest rate trend, right, then you will see some impact. And also the liquidity risk. The liquidity risk that we are talking about here is that when a warrant holder is unable to sell his structured warrant back, okay, when the liquidity provider is not in present. So to CIMB, we always ensure that we will quote a very tight bid-ask price spread for all our warrant. But sometimes you will notice that the bid-ask spread of certain warrant is not tight enough. Okay, that also because some of the underlying, okay, some of the mother share, if let's say the bid-ask price is wide, right, then the warrant bid-ask price will also follow the liquidity of the underlying share. Okay, so these are the 4 key risks that you need to remember when you are investing in structured warrant. Now, the next thing I want to talk about is what actually you need to know when a warrant is expiring. So you need to remember that the last trading day of a structured warrant is the second market day prior to its expiry date. Okay, which is like easy for you to remember is T-2 from the expiry date itself. So a cash settled European style structured warrant will be automatically exercised on the expiry date. Okay, and if let's say the warrant is in the money, right, then the warrant holder will receive the cash settlement amount within 7 market days from the expiry date. And we also encourage all investor or warrant holder to register e-dividend. This is because then we can actually pay the cash settlement amount directly credit to your registered bank account for the e-dividend registered bank account instead of sending check. Because sometimes when we are sending checks, right, some of the investors, if let's say their area, they may not be able to receive the check that fast. Okay, so there is a problem for them to also cash in the check or deposit the check, okay, at the bank branch. So actually you are encouraged to register e-dividend, okay, so that you can receive the cash dividend directly to the registered bank account. But one more thing I need to highlight is that this is only applicable if let's say your CDS account is a direct account, okay, but if let's say your account is under nominees, then we will actually pay the cash settlement amount to your nominees. Then your nominees will distribute back the cash settlement amount back to you. So it may take some time if let's say you are a nominees account holder. Okay, so the key thing is how actually the issuer calculate the cash settlement amount of a structured warrant. So this is the formula of calculating call warrant and put warrant cash settlement amount. The main difference is you can see, okay, we highlighted here, which is for call warrant, we are using closing price or the closing level to minus the exercise price or exercise level. But for put warrant, we are actually using the another way around, which is exercise price minus the closing price. So the key part here is you need to know how the issuer determine the closing price or the settlement price, okay? So in this whole formula here, okay, you actually know all the factors. Okay, the only things that you don't know is how actually we calculate the closing price or settlement price when it comes to expiry. Okay, so let me show you. Okay, the first method, right? In the market right now, we have 3 methods to calculate the settlement price or the closing price. So the first method is for a single stock, right? We are using 5-day VWAP price of the underlying security immediately before the expiry date. So simple term is that we use 5-day VWAP price, 5-day average VWAP price of the underlying share before the expiry date. This is not including the expiry date itself. Okay, so it's T-5. So the second method is the issuer can use 5 days average closing price of the underlying security immediately before the expiry date. Instead of using VWAP price, okay, the issuer can also just based on the 5-day average closing price to determine the closing price, okay, to calculate the cash settlement amount. The third one is to use the closing price of the underlying security on the market day immediately before the expiry date. So it's the closing price, okay, T-1 of the closing price of the shares. Okay, in the market right now, in Bursa market right now, okay, we can see most of the issuer are using either A or B. For CMB, we are using the A method, which is the 5-day average VWAP price of the underlying security to calculate the closing price or settlement price, okay, for the when the warrant comes to expiry. But you need to be very careful on how the issuer calculate the cash settlement amount. This is because it may impact the cash settlement amount if, let's say, you do not aware how the issuer calculate the cash settlement amount, right? This is because if you look at the 5-day average closing price, right, sometimes you will notice that when it comes to the closing price or the closing session that time, right, some of the investor, maybe because of the major shareholder or some institutional investor, okay, when they sell bulk of shares to the market, okay, it will press down the closing price. Okay, so to be fairer to the investor, okay, I would think that using 5-day VWAP price is much more fairer to the investor. So before you buy any warrant that time, make sure you check how the issuer calculate the cash settlement amount. Okay, so the next thing is we want to know how actually the issuer determine the closing level. If let's say you are buying a index structured warrant, let's say you buy KLCI or Hang Seng warrant, right? So the first method is we can use the closing level of the underlying index on the market day immediately before the expiry date. Okay, this is talking about the cash index. Okay, and the B method is the issuer can also use the final settlement price, settling the corresponding index futures contract on the expiry date. So the B method, okay, instead of using the cash index, we are using the futures contract as a reference, okay, to calculate the closing level. So the third method is the issuer can also use the average of the closing level of the underlying index for the 5 market days prior to and including the market day immediately before the expiry date. So for CME, we are using the first method to calculate the index, the B method to calculate the KLCI and also our Hang Seng warrant. Okay, it is based on the spot month index futures contract. So now this is the key part, how to choose a structured warrant. A lot of investors here, I think you will want to pay attention to this topic because I hope that what I'm going to guide you next, okay, can help you to make a better investment decision, okay, so that you won't need to pay too much tuition fee. Okay, so the first rule, okay, we actually summarized a few rule of thumb for you to use as a reference. So the rule number 1 is always remember that don't ever buy a structured warrant if let's say you don't like the underlying security, or if let's say you do not expect this underlying security to perform well, then you don't look at the call warrant. Some of the investors, they like to buy warrant because of their friends asking them to buy or their relative is asking them to buy. Okay, they never really go and study what this underlying security is doing. So always remember the first rule. So after you know what are the underlying security that you want, okay, that you are looking to buy for a call warrant, the second rule is choose the issuer that have the following criteria. Okay, strong credit rating, established local presence. Okay, so in case you do not receive any of your cash settlement amount, either credit to your bank account or you do not receive any check from us, at least you can go to the nearby CIMB bank branch to inform our colleague so that our colleague will also route your issue back to us, right? So this is why also if the issuer, you need to make sure the issuer have an established local presence and also a proven track record as an issuer. So the rule number 3, okay, is that when you compare warrant that time, right, a lot of warrant that time, you need to make sure that the warrant that you're comparing is the same underlying security. Some people, they call me asking me, should I buy Tenaga C1 or Top Blue C1? Which one is better? You cannot compare apple with orange, right? So make sure you always compare warrant with the same underlying security, which have the similar moneyness, okay, and also tenor. So the rule number 4 here is you pick the call warrant with the lowest implied volatility. So after you select a series of warrant that have the similar moneyness and tenor, then you pick the call warrant or the structured warrant with the lowest implied volatility. I will talk more about implied volatility later on, okay? So this list is for you to use as a reference, a general guide. So if let's say you have any other preference or you want to add in to this rule of thumbs, right? Of course you can do so, okay? So let's look at some technical terms when you are buying warrants, okay? Some investors, they will always buy warrant with a lower premium because they thought this is cheaper. But it is not, whether a warrant is cheaper or not, right? It is not like determined by the premium. What the premium is trying to tell you is just measuring the cost of purchasing an underlying shares through the warrant compared to buying the underlying share directly. Okay, so let's say the underlying share price now is at 1 ringgit, okay, and also you buy a warrant of exercise price 1 ringgit, and the warrant price is 10 cents, exercise ratio is 1 to 1. So when you add this up, okay, the front here is 1 ringgit and 10 cents minus the current share price 1 ringgit, you get 10 cents, and you divide by the underlying security price here, which is 1 ringgit, you will get 10% premium. So it only tells you that you are paying 10% premium to gain an exposure to this underlying security through a warrant, but it doesn't really tell you that you're buying a cheaper warrant or not, okay? So is a warrant with a low premium a good buy or not? It is not true if, let's say, you are buying a warrant with a low premium and the warrant is going to expire soon, like in a week, okay? So because in a week time, there will be a lot of changes to the underlying share prices as well. So you may not know, okay, whether this warrant will expire in the money or not. So you should not buy a warrant because of a low premium, okay? So in this question here, okay, you should buy a warrant, okay, with a premium of 5% and a 1 year to maturity, instead of buying a warrant with 1% premium and 1 week to maturity, okay? So the next technical term that we want to learn is gearing ratio. Gearing ratio is a layman term to denote the leverage exposure of a structured warrant to the underlying share price, to the underlying security. So a lot of investors, they like to buy warrant with high gearing because they thought warrant with high gearing, when the mother share price move 1 cent, the warrant with the high gearing will also move like multiple times, but it is not true, okay? So gearing ratio is only measuring, okay, the underlying price that you pay divide by the warrant price multiply exercise ratio. So let's say the underlying price, okay, same 1 ringgit, and the warrant price is at 10 cents. The exercise ratio is 1 to 1. Then this warrant is having a 10 times gearing, okay? But it does not mean that it gave you a 10 times return, okay, at the end of the day, okay? Because high gearing warrant is always associated with a far out of the money warrant that will expire soon. Because it is far out of the money, like the warrant price is only 1 cent, okay? That's why it looks cheap and it makes the gearing ratio looks higher, okay? So what actually professional investor or trader is actually looking at is the implied volatility, okay? Implied volatility is a function or a figure that factor in all the factors that we need to price a warrant, okay? Such as when we price a warrant, we need to know what is the underlying share price. We will need to determine what is the exercise price, exercise ratio, and we know the interest rate. We also know the expected dividend because we will check back the historical dividend of the underlying shares. And we need to determine when is the expiry date. The last thing we need to know is the volatility, okay? So after we put in all these factors, right, then we will come up with one warrant price that we need to sell in the market. But when it comes to reality, right, because the warrant already listed in the market, you already know what is the warrant price and all the factors, okay? But usually you wouldn't know what is the implied volatility if you are looking at your trading platform, okay? Because usually this our trading platform, we don't show the implied volatility. So this is the key part that you need to find out before you buying a structured warrant. So let me give you an example here. Okay, we have 4 top glove warrants here. The data is as of 19 May. Okay, quite recent. So you look at all 4 warrants here, right, with different moneyness, gearing, and premium. So if let's say we don't calculate the normalized warrant price, right, you would think that top glove C1F is actually same price. Looks like it's the same price with top glove C1D, but always make sure that you normalize the warrant price, which is to also factor in the exercise ratio. Okay, so after you comparing, then you will notice that top glove C1T has a lower normalized warrant price. In terms of tenor, top glove C1C is actually longer tenor, and gearing wise, top glove C1D has a higher gearing, and premium wise, top glove C1D has a lower premium. In terms of moneyness, also top glove C1D has a lower less out of the money. So when you are comparing a lot of warrants that time, right, and you are looking at all this data, right, it will make you confused. Okay, sure, you will get confused. Okay, because even professional trader looking at all this data also, they will get confused. So what actually the professional trader or the issuer like us, we will only pick a warrant with the lowest implied volatility. Because if, let's say you don't see this implied volatility in your screen also, right? You look at the normalized warrant price, right? You notice that the warrant with the highest implied volatility also is having the highest normalized warrant price. But make sure when you want to compare a series of warrants, few warrants together, right? Make sure the rule number 3 that we mentioned just now, pick those warrants with similar moneyness and also similar tenor, all right? So why actually we want to use implied volatility to determine which warrant to buy? So this is another example with a result. Okay, so this example is tableau C61 and tableau C55. You can see tableau C55 is actually in the money, okay, because the share price now is 4 ringgit 65 cents, but tableau C68 is slightly out of the money. But when you look at normalized warrant price, right, a out of the money warrant is actually more expensive than a deep in the money warrant, which doesn't make sense, and it actually show in the implied volatility also. So when come to the expiry date, both also is having the same expiry date. The closing price is of C61 is a bit different than C55. This is because the tableau C61 are using a different calculation method to calculate the closing price or the settlement price compared to C55. All right, so you have different outcome. This is also why just now I mentioned that you need to know how the issuer calculate the closing price. All right, so you see the outcome can be very different. Okay, tableau C51 give you a return on investment of 251% compared to tableau C61 146%. So this conclude that the attractiveness of a warrant strike can actually be determined by its implied volatility. So you don't actually need to compare like gearing or premium to determine which warrant to buy. Okay, you just pick those warrant that with similar moneyness, okay, and same tenor. Okay, then just look at the implied volatility. All right. In this table also, we also see why if you are expecting the share price to move up that time, right, you should consider call warrant. Okay, because if let's say you're buying the mother share tableau, the ROI that you get is only 20.5%. Okay, but tableau C55, okay, give you more than that. Okay, way more than that. So common question that we have on structured warrant. Okay, usually a lot of people, they misunderstood the role of a market maker. Okay, they will call me or my colleagues, okay, to say that, Iman, can you support or push up or down the warrant price? But we cannot, okay, because the role of the market maker, right, is actually to provide liquidity, okay, to the structured warrant by quoting the bid-ask prices to this warrant with adequate size and minimal spread. Okay, so market maker are usually the structured warrant issuer, or some issuer also, they can appoint another third party to become the market maker of the warrant. But at the moment, CIMB is the issuer, and we are also the market maker of all our warrant. So the second question, would you lose less buying a deep in the money call warrant? The answer is no. Because just now I show you the payoff diagram, you can see that when a deep in the money call warrant, it will react more sensitive to the changes of the underlying price. All right. So when the underlying price moves down, okay, it will also be the same. Okay, in terms of value, it will lose a lot more compared to a out of the money warrant. Okay, so a deep in the money warrant, when the share price tank, right, it can drop from like, let's say 50 cents per warrant to 20 cents per warrant. Okay, but a far out of the money warrant, maybe you buy at 2 cents, but when the share price down 10%, this far out of the money warrant maybe drop like half cent. So it is not true that buying a deep in the money call warrant will lose less. Okay, so if you want the warrant price to be more sensitive to the changes of the underlying share price, then you look for the very deep in the money call warrant, and you pick the one that with the lowest implied vol. Okay. So the third question, are cheap warrants attractive? This is another famous question that we have because a lot of investors, they like to buy half-cent or 1 cent warrant. Okay, because when the 1 cent warrant move to 2 cent, okay, then they will make 100% profit. But you need to ask, right, what is the moneyness of the warrant? If let's say it is 30 or 40% out of the money, and it left only like less than 1 month to maturity, do you think the warrant will become in the money? If let's say it is not, right, then this 1 cent that you are paying most likely will become worthless. That also explains why some of the investors say that call warrant always expire out of the money, but that is because you are buying a far out of the money warrant. Okay, so you need to take note on this thing. So do most structured warrants expire out of the money? Like I mentioned just now, it depends on the performance of the underlying share. Okay, the issuer cannot really like influence the underlying share price because you need to know that in the market, right, there are a lot of investors in the market. We have a foreign investor, okay, institutional investor, okay, that are in the market. So if let's say the warrant is expired out of the money, okay, that most likely because you are buying a far out of the money warrant, or you are holding a warrant from in the money until it become out of the money. So in investing in structured warrants, right, you need to have a very clear strategy when to go in and when to go out. Okay, so does corporate action affect structured warrant? Yes. So corporate actions such as bonus issue, share split, share consolidation, capital repayment, and right issue. For this corporate action, we will actually adjust the exercise price and exercise ratio of the structured warrant so that this corporate action will not have an impact to the warrant price. But if let's say it is a special dividends, right, then we need to determine whether this special dividend, okay, will affect more than 2% or more of the exercise price and exercise ratio being changed. So if let's say it is a special dividend, then on the come date itself, we will do a calculation and make an announcement whether we need to adjust the exercise price and exercise ratio of a structured warrant or not. Okay, but you need to take note that when we adjust the exercise price and exercise ratio rate for all this corporate action and also special dividend, but we will not adjust the exercise price and exercise ratio if let's say it is a ordinary dividend, okay, whether in the cash dividend or share dividend. This is because like just now I mentioned, right, when we price a warrant that time, we already factor in the dividend in the warrant price. Okay, so you actually not really losing out on this ordinary dividend. If let's say we don't factor in the ordinary dividend in the warrant price, right, then the warrant price will become higher. So you will be buying at higher price. So when we do pricing that time, right, we will actually factor in the ordinary dividend, okay, into the warrant price. So instead of selling you at 10 cents, after we factor in the dividend of 1 cent, we are selling you the warrant at 9 cents. So you are not worse off in this case. So is it important to know the issuer? Yes, because you need to make sure that the issuer will make payment to you when it comes to expiry. And if let's say the warrant is in the money, okay? So I also prepare some quiz for you to do some exercise, okay? So which type of structured warrant price will increase when the underlying security value increases? Answer will be A, okay? So when is the last trading day of a structured warrant prior to its expiry date? The answer is A also, T-2. So remember that T-2 is the last trading day. So 1 day before the expiry date, okay, you will no longer be able to trade the structured warrant in the market because the warrant will be suspended. So which of the following warrant is a more sensitive in absolute term to the changes in the underlying security price? So it will be B. A dip in the money warrant, always remember that will be more sensitive to the changes of the underlying share price in absolute term, okay, which means 1 cent to 1 cent. But in percentage wise, right, a far out of the money structured warrant may have a higher gain percentage compared to a dip in the money warrant. Just imagine a dip in the money warrant priced at 50 cents And when the warrant price move up 1 cent, right, you only gain like 2%. Okay, but if let's say a far out of the money warrant move from 2 cent, okay, to 3 cent, you are actually making a gain of 50%. So although in absolute term, a deep in the money structured warrant is actually more sensitive, but in gain percentage wise, a far out of the money warrant will have a higher gain percentage. Okay. So number 4, which of the following is not required to price a structured warrant? The answer is C. We don't need to know the trading volume of a underlying, okay, when we do the pricing that time. We just need to determine the exercise price, and we already know the interest rate and also the volatility of the underlying. So a structured warrant price will increase when its implied volatility increase, assuming all other factors held constant. The answer is yes. So even if it is a call or put, okay, both of this warrant, the price will increase when the volatility increase. Okay, this is because when the stock become more volatile at that time, it also means that it is more risky. So the warrant price will actually go up as well. So let me do a summary for you, okay, in this section. So remember that when you pick a call warrant, okay, you need to pick a call warrant which you believe the underlying security will perform well. Unless you are buying a put warrant, then of course you want the opposite to happen, right? The share price to go down so that the put warrant will go up, okay? And secondly, okay, when you compare warrants, right, various of structured warrant, you need to make sure that the warrant that you compare is having similar moneyness and also tenor. So usually what I do is I will compare warrant, let's say the current price is 1 ringgit, okay, the current share price is 1 ringgit. What I will do is I pick those warrant that within 10% up or down within the current share price. Then I will compare the tenor and also filter out. Then I pick the warrant with the lowest implied volatility. Okay, that's how professional trader is doing. So always check why a structured warrant is cheap. Okay, there's a reason why the warrant is trading at half cent and 1 cent. Okay, mostly it's because the warrant is going to expire soon, and also it is far out of the money. Okay, so buying a structured warrant is also not a bet against the issuer or market maker, because most of the time we hope that our investor can make money through trading in structured warrant so that this business can go longer. And don't forget that when you buy warrant, right, the issuer actually need to buy share, the underlying share. So if let's say the underlying share go down, right, okay, and you are buying a structured warrant like just let's say 5 cents, maybe you will lose from 5 cents to 3 cents, you will lose 2 cents per warrant. But the issuer may lose a lot more, okay, because we are holding the share. Okay, so the share price may go down from 8 ringgit to 5 ringgit. Okay, we saw this kind of thing happen recently also. So when you buy a structured warrant that time, right, it is not a bet against the issuer. And most of the time we hope that you can make good profit also. That's why I'm here today. All right. So this is a summary of my session today. So I will go through, while you are looking at another longer version of disclaimer, I will also go through some of the questions. Okay, let's see whether you have any question or not. Okay, one anonymous asking how to convert a company warrant to mother share. Would it auto converted once it reached expiry date? So anonymous is asking whether how actually we can convert a company warrant. Okay, company warrant is a bit different. When you want to convert a company warrants, right, you will need to fill up form and then send to share registrar, okay, to convert it into a mother share. So you can actually do this through your broker. So you just need to contact your broker. Then I think they will give you the form, and also you just need to attach the check together and send it to the share registrar in order for you to convert it to a mother share. But why actually the third party like us issue structured warrant is because we want to give you to gain exposure to the underlying security and with a fraction of the underlying security price. This is the key part why we issue warrant. Okay. And for company warrant, they issue the warrant is because they want to raise fund. Okay. So company warrant, usually you can see in the market, starting with those, let's say Pavlov-WA or WB. Those are the company warrant. If you are looking at warrant like Pavlov-C1, C2, then those are the structured warrant issued by the party. Okay. It's not related to the listing company. What is the different strategy? What is the Okay, True is asking what is the different strategy to buy structured warrant of an index compared to a share that is holding. Okay, I think what True is trying to ask is how to determine when to buy a structured warrant of an index compared to a share, right? If I'm not wrong. Okay. Okay. When you buy a warrant under a one underlying share, right? Okay, it is because you are very confident that this share will move to the direction that you are expecting. All right. So then you will buy warrant under this certain underlying security. But when actually you want to buy a warrant under an index is when you do not know which underlying security will do well or perform badly, but you are expecting in overall the market will perform well, like the KLCI will increase or in bullish trend, but you don't know which stock to buy. Okay, but you know definitely that the index will go up. Then you buy, then you will start look at the KLCI warrants instead of single stock warrants. All right, so that's the difference how you can plan which warrant to buy. Like recently, I think the market is a bit bearish, right? So some of the investors, what they do is they are holding a basket of shares. Okay, they already have this basket of share in their portfolio. And if let's say you want to do hedging, okay, you are actually incurring some paper loss in your portfolio. But how you can avoid or make profit when the market is bearish is to consider put warrant and index put warrant. All right. So when you are having paper loss in your portfolio, but you will also make profit in the put warrant, so you can do some hedging. Okay, if you are expecting the bear market is coming. Okay, next question. Is it possible for structured warrant holder and issuer to both make money? Yes, correct. It is possible. And most of the time, okay, when the warrant investor is making profit, right, then the issuer will make profit as well. But there is also some circumstances where the investor is making profit, but the issuer may make losses. This will only happen when the share price suddenly spike up a lot. Okay, then the issuer may make some losses, then the investor will make profit. But in general, when the warrant investor, they are making a profit, the issuer will also make profit. That's why it is not a zero-sum game. All right. Okay, any more questions? If yes, you can put in the question so that I can see what is holding. Oh, Chu is also asking what is holding capital cost in my slide just now. Okay, we are factored in the holding cost is because okay, in this slide, right, with G, we are factored in the holding cost because let's say you are not using this money to buy warrant or buy shares, right, and you put your money into some FD, you are actually earning some interest as well. So when we do investment at time, the period that we are holding this share or this warrants, right, we also need to factor in the holding capital cost. So we are assuming 5% per annum here. Okay, so you can see this is the holding capital cost. Okay, so I also know that like last year, a lot of investors actually making, some of them are making quite a good profit. If let's say you guys are buying those glove warrant in March and you are actually selling it in October, or maybe even if you are selling it in June, you should be able to make profit. But whether you can make profit in all your investment or not, right? Like I mentioned from the starting point, it is very depending on you time your entry level, your entry point, and also when you actually going to exit from this investment. So I noticed that a lot of retail investors, they make losses in structured warrant is because they are buying cheap price warrant and they do not know that this warrant is actually far out of the money and going to expire soon. That's why you heard a lot of myth about structured warrant, that a lot of people are losing their money in investment of structured warrant. But if you are a very disciplined investor, you know the fundamental analysis and technical analysis well, right? I believe you can actually improve your investment decision skill, and also in terms of the result, it should be better. That's why when come to trading in structured warrant, always remember the first rule is that don't ever buy a warrant if, let's say, you don't like the underlying shares. Okay, so this is the key. Where can retail investor get implied? Well, actually, we do publish daily warrant digest. You can go to our website and email to us so that you get some daily update. Okay, you can get some daily update of what warrants that we are highlighting for that particular day. So we also put the implied WO inside this warrant digest, or you can also go to some website also. Will the structured warrant price influenced by buying, selling? Okay, Anonymous is asking, will the structured warrant price influenced by buying, selling? Of course, in share market, even if the mother shares, right, it is actually influenced by the supply and demand. So the supply and demand is also one of the key factors that will affect the structured warrant price and also the implied volatility. All right. So when the demand is higher, okay, and the volatility is keep increasing, then that is when you will see the warrant price start moving up. That's why in the table just now, I show you, okay, the volatility, when volatility start increasing, right, the call warrant and put warrant price will both also will be increasing. Okay, here, okay. So supply and demand is also one of the major factors. Can we use technical analysis to enter for a warrant? Cannot. You cannot do technical analysis in a warrant's price chart. You should do technical analysis on the underlying share price chart. Okay, that is because when you buy a warrant, you are actually wanted to get exposure of the underlying security. So you shouldn't do a technical analysis in the warrants price chart. So this one is also one of the key things that you need to remember. All right, a very good question as well. What is an indicator to pick structured warrant? Okay, I think I'm going too fast. So the key indicator is to, let me summarize again, is to pick a warrant that you like, the underlying that you like, and then pick an issuer with strong credit rating. The key part is compare warrant with similar moneyness and tenor. Then only you pick the warrant with the lowest implied volatility. Okay. Another Anonymous is asking, is warrant structure investment often promoted by my banker? Is the same as this warrant that I'm explaining? I'm not too sure what product that you are looking at. I think that is some different structured product. Okay, so you may need to check with your banker, because structured warrant is actually a listed financial product where you can actually buy, sell through the market. So I don't think your banker will need to promote this to you, unless it is a broker, then that's different. Can you elaborate the calculation for implied volatility for retail trader? The calculation for implied volatility is a very complex thing, but if let's say you are interested, right, to know more about implied volatility, you can actually look for the Black-Scholes model. Okay, so in your Google, you just type Black-Scholes model of option pricing, then you will actually learn more about implied volatility. But I can tell straight is that it's a very complex mathematic calculation. Okay, it is not something that our retail investor can understand. So, but the key part here is to pick a warrant with the lowest implied vol, because actually you can get the implied vol information. If let's say you cannot get it, then maybe you can call Iman or just give an email to us so that we can help you to check as well. When the, okay, another on anonymous is asking, when the underlying stock is limit up, is it possible its call warrant also go limit up? Yes. I think recently we saw one scenario where when the MMC Corp, after a suspension, when they resumed that time, the share price actually hit limit up, and the warrant price also hit, I mean, our warrant also hit limit up in the morning, and also another limit up in the afternoon. So it is possible that you will see the share price is hitting a limit up, and also the call warrant, okay, especially the deep in the money warrant also hit limit up. But it depends. If let's say it is a far out of the money warrant, then maybe it will still move, but maybe not moving that much compared to a deep in the money call warrant. Okay, so any more question? Okay, I think that's it, right? I don't see any more questions from all of you. Okay, anonymous, another anonymous is asking how to see CMB live metric. Currently, we do not publish any live metric in our website, but we are actually doing some enhancement to our existing website right now. But when you look at some price metric, right, make sure you also read the disclaimer clearly, because if let's say there are sudden spike up of the volatility of the underlying share, then some of the price metric may not be reliable anymore. Okay. Okay, so I think you guys have no more questions, right? I don't see any more questions. Okay. Okay, if let's say you guys have no more questions, so just I want to say thank you for all of you, and especially the Bursa Malaysia team once again, and thank you for your time. If you still have any question, you can always email to us at warrant@cimb.com. So I will actually look at your question and answer one by one if let's say you have anything that you are not sure. But I hope that in this session you will get some concept or some idea on how to choose a structured warrant. Okay, I'm sure there are a lot of new investors out there that have never buy warrant before. So I hope in this session, at least I can give you some idea on how to choose a structured warrant. All right. So I will end my session here. Okay. And I will pass it over back to our Bursa Malaysia team. Okay. Thank you, everyone.